I mean, they came out on a Saturday night. No one even thought about it. We don't know who was running the country at the time. They picked 18 countries that they felt were really friendly. It was an abomination. Our country does not do that. Our country does not say, here's 18 friendly nations. So I don't know what country they thought they were running, but it's not America. You don't just say, hey, you know what, here's 18 nations we like.
Right.
What is that, like these are our pen pals?
Right.
These are who we're inviting to the Sweet 16, Sweet 18. I mean, that was so embarrassing. And of course, did they talk to Jensen before? No, they just here you go. What
I know, but it's old news now. The question now is, are there going to be new rules? What are they going to look like, and how much is it going to be allowed to sell to China?
And we still have plenty of geopolitical hawks who are worried about supplies leaking in.
Look, I know that right now we give a second-rate chip to China. I thought that was a really good plan, frankly. The H-20, it wasn't able to, I think, to be as weaponized as what you could do. I trust Jensen. He said the H-20 was good, and that's fine. That's what we were doing. I just think that you don't want a rules-based thing. Here's a rule: the president goes to UAE and gives them all we want. But Israel, no, it doesn't go to Israel. It's up to Jensen to go to Israel, which used to be a friend of ours, I thought. Well, there's a lot of countries that I thought were our friends that were not in the list. A lot of Southeast Asian, a lot of Latin America.
Listen, the takeaway I had from Musk, obviously, is the demand is undiminished in terms of the need for these GPUs at this point.
Undiminished. Remember when he felt he had better chips? That was a great question, David. Because at one point he thought he had better chips, and then he had to go hat in hand.
Right, well, they're
NVIDIA.
Still developing them, the Dojo chip, I guess, or what? Yeah, sure, but yeah, certain things. And Amazon, by the way, is also developing its own.
Oh, the training. They'll take every single NVIDIA they can get. Reporting, like you do.
Understood.
I didn't grok that.
Understood.
What explains the weakness in Palo Alto then today?
Okay, so Palo Alto did not, they beat, but they did not raise. Now, there's a history of them doing that. I think this is an overreaction. I do think that everybody, remember I said April's was a tough month this country, but this is the opportunity. Now, this is another one. This one usually goes down between 7 and 10%. Then it stabilizes tomorrow, and by next week it starts going up. That's the pattern. And, look, I can just tell you that's a correct analysis, or I can tell you what happens every time. TJX, same thing. These companies do not put themselves in harm's way. They do not raise big because they know that that's going to lead to sadness.
Well, Nikesh Arora did have a word or two for those who doubt the overall trajectory. Take a listen to what he told Jim last night.
When people talk AI, all the naysayers, all the companies which are holding back on their technology transformations going to the cloud are suddenly trying to re-accelerate because you cannot deliver AI unless your data moves to the cloud.
On a week where we're getting a couple of big developer conferences out of Google and Microsoft.
Yeah, look, I just think that it's business as usual there. It's AI. They have this... They are all in on AI, and you have to be, and the threats are as horrible as ever. But at the same time, if you do not raise the next quarter, especially when it's the end of your fiscal year, then your stock gets hit. That's the game.
Yeah.
That's just the game. We know that. Dave, you hear anything on the PSX?
I am, and I know you're getting some texts as well.
How'd you know that?
Because I know what's going on, man. And I know who they're from. Phillips 66, PSX is what Jim's talking about. We've talked about this, of course. Big proxy fight, Elliott, which is the most active of activist investors out there, the most important activist as well. But this is the first time in the U.S. that it has actually gone to a vote in a proxy fight. And it appears the outcome is they won 2 seats. The company Elliott, in a statement saying, based on a preliminary analysis from their proxy solicitor, 2 of their nominees, Sigmund Cornelius and Michael Heim, were elected to the board of directors at the annual meeting. Now, they had 4 nominees, and in fact had gotten support from the influential proxy advisory firms such as ISS and some others for, if not all, most of the slate. I think ISS was all. I don't know, Jim, how you would term that. Interesting to see the stock reaction.
I think
and I wonder whether that's a reaction to the fact that perhaps they didn't win 3, and there's not a thought that perhaps there won't even be more change more quickly on the board.
I guess that's.
I know Greg Hayes is on that board, if I'm not mistaken, right?
Yeah, that's the reaction. I think there were people who felt that there could be an immediate transaction or something, which was never the case. I think that's an overreaction. It's not a great group right now, but it's an overreaction.
It's not a great group right now as well. But they do win 2. By the way, There's not like there's a standstill, which you would typically sign if you actually had a settlement, which is, again, almost always the case in these kinds of things, certainly when Elliott's involved in the U.S. until now. So it doesn't mean they can't come next year if they don't want to just keep coming.
Right. Exactly
when it comes to Phillips, and obviously a lot of different things that they're arguing for in terms of what the company should be considering. As I sort of go to my notes here, spinning off the midstream business, divesting the chemicals business, and obviously their charges that the board failed in its oversight with new directors lacking independence from the CEO.
Look, everyone can always do more hard work. That group is a very tough group. By the way, the retail group is total chaos today. I mean, Home Depot's back down again. Lowe's is down. I thought Lowe's had a good quarter. Again, on Target, it's not existential. They got a real good yield. They're going to figure it out. I'm just saying that you're up against a wall here, and the wall is Walmart.
It's not all bad. Goose, although they did pull their guidance up 21% as they come in with the beat, Jim.
Oh,
kind of a volatile name.
That's good. They've been. Danny's good. Danny Reese is a terrific guy. That's been a very tough one to own. But the one that is the stars is Gap. Richard Dixon, people are finally realizing he's doing great work. The stock went down to 19 during the last sell-off. You can look at this. The stock went to 19. It's now up to 28. It's back to where it was. That also ruins it a little because it's going up in anticipation of the 529 report. But again, we're just in the maw of this bill. And I'm just not going to say that you can buy stocks when we're in the maw.
Right. Well, that could be a problem. I mean, we're going to be dealing with this at least through the X date, July, August, right?
Well, I'm hoping for something on Thursday, actually, that would make us feel like the president has to do what. Remember yesterday he said, listen, I'm going to destroy your career. He may have to go start destroying some careers to get this done. You know, that's kind of what he's talking about. If you're not on board, he's going to target you.
I know.
Well, but that's
not the first time he will have done that.
Right. So that's why I'm hopeful that something gets done.
But there are deficit hawks who conceivably are going to stick to their guns, so to speak.
I think they should go with the program.
And then on the other side are the blue state Republicans who want a higher salt tax cap. And
well, do you think
talking about only a very small number of votes because the Democrats are united in their opposition?
Look, I think the president made it very clear yesterday. Your career's over if you don't go with the program.
Yeah, well, LBJ twisted arms too. Didn't mean he got his way every time.
Well, I mean, did you see Bryan Cranston as LBJ?
Yes.
Well, yeah.
That's a good one.
He gets his way. Okay, and I think that the president is every bit as strong as LBJ when it comes to this stuff.
LBJ is the Senate Majority Leader, or LBJ is the president?
As president, when he picks you up, it gives you a nice bear hug.
He actually would do it as Majority Leader. Is what he? I mean, when he was in the Senate. That's what you've seen those things where he's backing people against the wall.
Great photos.
Right. Well, look, the president is set. He went out yesterday and basically just said, look, your career is over unless you vote with me. I think that he certainly can come up with a candidate. Oh, UNH is up. You know what UNH feels a lot like today? Remember Sandpiper?
God.
You remember Sandpiper?
No, I don't.
I don't. Bob Odenkirk and you know.
Yeah. This piece in The Guardian, they argued this investigation that the company, quote, secretly paid nursing homes thousands in bonuses to help slash hospital transfers for ailing residents. The company later did respond, said the DOJ has looked into this, interviewed witnesses, gotten documents, and demonstrated significant factual inaccuracies in those allegations.
Well, and declined to pursue the matter as well. They go on to say at the very end there, UNH stock. Sorry, go ahead,
Of the
Jim.
things that they,
Yes.
I mean, I thought that this was about as strong a denial. They've not denied the other stuff.
No, this is a strong denial in terms of the Guardian story that we just referenced from UNH.
Well, you
the
better
stock
call
is
Saul.
still down. I did see a downgrade today from HSBC.
Oh, the HSBC, that's really early.
Where they're going, I know. Down now, they downgraded to a reduce.
But they're looking for
I will
a
say,
trough.
I talked to one investor today who's buying the stocks and a lot of it with the belief that the concerns about the DOJ and criminal will ultimately prove to or not prove to be significant,
Right.
and that while they certainly are going to have a lot of headwinds from Medicare Advantage and what's going to happen there, ultimately this is a company that can still earn as much as $22 a share this year and $26 or $25 a share next year. You back into a $25 a share number in terms of a multiple on 26, and their opinion is worth buying here.
Well, Mr. Hemsley bought so much stock. I mean, how could you not? You see those insider buys from smart people? Those are not idle. It's not an idle buy.
No, you've mentioned Hemsley a number of times.
I think
both because
Hemsley's,
you have confidence in
Hemsley's
him
money.
And because he actually
He's
bought
money.
stock.
He's very good. The ones I'm really worried about, I'm worried about HCA and Tenet on the cutback in Medicaid.
Yeah, right.
Because they're the ones that thrive on Medicaid. This is ACA. They're the silent attack on ACA.
The Affordable Care
Yes.
Act, and you're talking about the hospital companies here, obviously.
Yeah, well, because
HCA.
they're going to delay reimbursement, or they're going to lower reimbursement because Medicaid is cut back. Now, I would not use the president's analysis of what should be done with Medicaid because that was almost Alex Karp-like in its way.
Yes,
With
yesterday.
Alex Karp being the benchmark in terms of people who come on the show and say things I don't like. Use words I don't like.
Well, there's reported words from
Reported words.
from
Yeah, we
people
don't
in the
know.
room. Yes.
We don't know. Palo Alto down 50, TJX. Just go buy TJX. Enough already.
There is again. He always just looks at the tape. He literally
Yeah.
just
Well,
looks at
It's old habits die hard.
It's a
Just
130.
can't.
The stock will go to 130 today.
It just amazes me. It's
You win
like-
25,000. You bid 130 for 5, and then you just build it in a pyramid fashion, and you're going to be like clover.
Nothing changes from the time he's at Harvard, looking at the tape.
Nothing's going to change.
Look at the tape.
Nothing's going to change because that's who I am. I am a dollar sign represented by a man, and I've told you that many times.
It's a little bit late to change your habits, Jim. Yeah. As for the markets, Dow's down 350. Obviously, a big piece of that is UNH, but we're holding 5,900. Watch bonds. We will get a little Fed speak. Barkin at noon. 20-year bond auction at 1. That's going to get watched pretty closely here as the long bond still holding on to a 5 handle, but a few basis points off the intraday high. Weird combination of Dow Industrials that are green.
Wow.
Nvidia, Coke, and Cisco, Jim.
I got some on all those. Cisco says some good things in Europe. I actually like the Coke. Coke may be coming back market share.
Because of Pepsi's troubles.
I think so.
Yeah.
UNH, obvious, right?
We're off of the initial lows, though. Dow's down 316.
Nike's finally taking a break from like being like a juggernaut
Yes.
from 54 level.
We'll talk with Jim in a moment about today's club meeting. Don't go anywhere.
AI meeting agent.
Jim, big club meeting in a couple hours.
Yeah, okay, so we're going to talk about some of the stocks that I'll give you a hint about what my favorite stock is. I talked about it, which is GE Vernova, and then I've got 9 others that you must listen to. 4 that I like and 5 that I am concerned by. You have to, I'm not going to give it away, but I am concerned, and it's not great. Tonight, I've got Snowflake, which is right now at the cusp of a breakout. That's Ramaswamy, who's done a really terrific job. And then Joe Hinrich, CSX. I mean, we have to know what the rails are saying because, again, I think that April is a weak month. And we're going to, a lot of these quarters that we're hearing, they ended at March. March was still good because it was pre-liberation day.
April's the cruelest month. Sorry.
You are good.
I couldn't help
literally
myself.
was.
Couldn't
Yes.
help myself
And I
there.
just want to say that during the break, David says things that matter. And we should be talking more about AI because people aren't being hired anymore. I mean, the accountants are being lawyers.
It's always good when you introduce a huge topic right at the end of the show.
Right.
Then maybe I'll stay.
One
okay?
last thing. Hey, Steve Jobs did it.
I got my 12 o'clock club meeting that I want you to join the club. Obviously, I'm self-serving there. I don't feel good about that.
That's so you shouldn't worry about
No,
it.
it's
Club's a
self-serving.
good
If you're
thing.
not going to sell it, who is?
Yeah, club's a good thing.
Wow,
Yeah.
and Goldman Sachs, that's what they first thing they said. It's got to be sold. If you're not going to sell it, who is?
Jim, we'll see you at noon and then at 6. The club meeting in Bad Bunny, 6 p.m. Eastern time with the Dow down 300. Stay with us. Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with David Faber here at Post 9 of the New York Stock Exchange, along with Morgan Brennan, who joins us today from CNBC's CEO Council Summit. Sarah Eisen has the morning off. Meantime, markets in a bit of a sell-off mode. Dow's down 300. Only one sector's green this morning. That's communication services, and breadth fairly negative, about 4-1. Today, Elon Musk teasing a future dominated by self-driving cars and Tesla robotaxis in this wide-ranging interview with David right here on CNBC. We'll get the headlines, what it means for investors later this hour. Plus, Google wrapping up its developers conference today. Kind of a muted reaction from the street. The only Mag 7 name in the red over the last year. We'll talk to one analyst who says shares can rebound in a big way, but only if the company makes a radical and surprising move.
Well, we're 30 minutes into the trading session. Here are three big movers that we are watching this morning. We've got fresh results from a number of retailers this morning, including Target, Canada Goose, VF Corp, TJX. We're going to talk more about what's driving declines for Target specifically in just a moment. Those shares are down about 6.5%. Meantime, Palo Alto Networks at the bottom of the S&P 500 this morning. Gross margins missed, though earnings and revenue did top estimates, also down about 7%. United Health under serious pressure again today. The Guardian reporting that the company secretly paid nursing homes to reduce hospital transfers for ailing residents, saving millions in care expenses. The company saying in a statement, quote, the DOJ investigated these allegations, interviewed witnesses, and obtained thousands of documents that demonstrated significant factual inaccuracies in allegations. After reviewing all the evidence during its multi-year investigation, the DOJ declined to pursue the matter. Carl, those shares are still down about 25% since the start of the month.
Morgan, thanks. UNH is weighing heavily on the Dow this morning, and stocks, as we said, broadly lower across the board, nearly every sector in the red as some of these long-term yields move higher. Our senior markets commentator, Mike Santoli, is with us this morning. He's watching that, some VIX expiration and everything else, right?
Yeah, in a sense, we came into this week and we were supposed to be pausing or pulling back. That's where the market was poised because of how overbought we got, right, with 23% up in 6 weeks in the S&P 500. The way that positioning was so radically wrong-footed among institutions near the lows, they had this sort of chase instinct that was just necessary. It's back up to around neutral. So people who bought don't feel as underinvested. And then when you had the de-escalation of tariffs, it felt as if, look, that's a week and a half ago right now. The last real move on that front was the pause with China and the reduction in stated tariff rate. Okay, we kind of used it up. So I think that's why yields are really the chief headwind and the main touch point for what equities are going to do right here. They're not blasting off. They're not fully unanchored, but they're high, and they're globally high. You have 30s about 5 again, not really surging through that level, but uncomfortably sitting there. And we're at a moment when that definitely works against equities because you're going to be testing the economy for the ability to absorb it. You obviously have a little bit of a valuation cap on this market, I would argue. We were traded up toward 23 times forward earnings in the February peak. You're 21.5 right now. How much higher are you going to go, when you have these unknowns that are still in place where we didn't really know they were there in February?
Well, aren't we were up on yields, though, during the period of that 23%
Yes.
6 weeks as well.
We were.
So what's different now?
Well, because of the components of what's driving yields higher, I would argue, David, which is you're pricing out recession risk. That's part of it, right? You don't want necessarily yields to be crashing because that means they think the economy is in rough shape. At some threshold, then it becomes either inflation expectations are perking up or it's this phantom variable of the term premium, which is investors are saying fiscal situation looks bad, too much treasury supply, give me more right now to compensate me for it. It's totally slippery, that concept, but it's hard to disprove, and it's hard to ignore right now. It's really hard to kind of get to 4.5 on 10-year and 5 on 30s without saying that's a piece of what's going on right here.
5-year tips are nowhere near as dramatic as UMISH 1 year.
Oh, no, nothing like it. That's why the inflation expectation piece doesn't account for it. They firmed up. But again, it's good that we're pricing out recession. It's good that the S&P industrials literally went to a new high. Right? The S&P as a whole is still 3 or 4% below. Exactly. So that doesn't mean that the market has it perfectly right, that industrials are going to rip from here, but it does mean that we've taken out some of the perceived downside risks of the economy, and maybe that means we can weather a wait-and-see Fed that's not going to be in a hurry to rescue things right here.
If I want to tell on the equity markets the next few sessions, perhaps I'm going to be looking at the 10-year first.
I think the market itself is sort of looking to the 10-year for permission, either to rally or for an excuse to sell off. And Carl, you mentioned the VIX futures expiration. That's today. It doesn't always have a specific knock-on effect, but there are times when the index becomes a little bit less tightly geared and it starts to have a widening out of volatility. The range might open up a little bit. And look, if we go down 3 to 6% in the S&P from here, that is a perfectly normal pullback. To pull back to the level from which we blasted off on the China news, that's 5,700. Under 5,600, you're still kind of okay. There'll probably be some scares along the way if we're going down to those levels because people think it started something more, but you can't say that it is, until we test it.
Mike, thanks. Talk soon. Mike Santoli. Morgan?
Yeah. Of course, we'll keep an eye on the $16 billion auction of 20-year notes later this afternoon, too, to the point. Well, Target is the worst performer in consumer staples after slashing its forecast, commenting on tariffs and pricing. Courtney Reagan is here. She has more for us. Hi, Court.
Hi, Morgan. Yes, so Target CEO Brian Cornell told reporters he is, quote, not satisfied with the retailer's performance. Target missing the street's estimates for earnings, revenue, comp sales for the full year. The retailer also lowering its expectations for sales and then widening and lowering the earnings guidance range as well. On a media call, Cornell called out, quote, ongoing pressure for discretionary categories, 5 consecutive months of declining consumer confidence, tariff uncertainty, and the reaction to its updated DEI program, which it calls belonging, as drags on the quarter. Now, traffic and transactions, those fell too. Margins were compressed from higher markdowns and the higher cost of digital fulfillment. Valentine's Day and Easter did drive sales, and that limited Kate Spade collaboration was, in fact, the strongest in a decade. Now, Cornell wouldn't say definitively if the retailer had raised prices due to tariffs or would in the future, even though he had said on March 4th here on CNBC that prices would go up within days if tariffs of 25% went into effect. Like other retailers, Cornell did say Target has many levers and mitigation strategies it would employ and is doing so, and it would raise prices from tariffs only as a, quote, last resort. David?
Okay, Courtney, thank you. Courtney Reagan back at HQ. Let's turn now to Tesla. Had an extended 2-part interview yesterday with Elon Musk. It was at the company's headquarters, its Gigafactory in Austin. We took a tour of the factory as well, talked extensively about the ambitions the company has for autonomous driving. Of course, the very important rollout of autonomous in Austin is going to begin towards the end of next month. And while that's going to start small, Musk indicated things are going to get a lot bigger very quickly.
One set of regulations that, just like there is for highway driving, that's what I think makes sense for the country as a whole. But my prediction is that probably by the end of next year, we'll have probably hundreds of thousands, if not
hundreds of thousands,
if not over 1 million Teslas doing self-driving in the U.S.
Those are not okay. What percentage of those are going to be? Well, not the Cybercab. You're just talking about on full self-driving, level 4.
Unsupervised full self-driving,
right.
Meaning you do not need to pay attention.
Right. For me, if I own a Tesla and I have the software and the capability of doing it.
Yes.
Right.
But we'll have a model which is kind of like some combination of Uber and Airbnb. So if you're a Tesla owner,
right.
You'll be able to add or subtract your car to the fleet. So just like in Airbnb, you could like rent out your spare bedroom or rent out your house when you're not using it. And the same thing will be available for Tesla owners. So
right.
It's a way for Tesla owners to earn revenue instead of having your car sit in the parking lot. Your car could be earning money.
You and I talked about that a couple of years
Yeah.
ago, which takes me back a bit because, of course, I mean, you remember 2019, you were talking about 2020, the introduction of autonomous, and now you just introduced a fairly somewhat ambitious target. Why do you have the confidence now that in a year there'll be 1 million available?
Well, by the end of next year, I think.
End of next
year.
year.
So it's more like 18 months.
26, okay.
Yeah.
Right.
I think these things happen slowly, but then all at once. Mm-hmm. So, it's Peter Thiel has a book, 0 to 1. Once you have a proof point, once you have it working, then scaling up is, just a matter of time. So once it's working well in Austin, then we'll make sure it works well in other cities. I mean, there are obviously some unique cases like downtown New York, like, yes. If you're but that's a highly unusual situation. Most cities in America are like Austin. So
right. Although you can go on full self-driving right now in New York. I mean, you can obviously have to sit there behind the wheel,
Yes.
and it'll do it.
Oh yeah, no,
It'll navigate the traffic. I've seen it.
yes. No, even a Tesla that you buy right now, and the self-driving just costs $99 a month, will give you autonomous driving anywhere in the country right now. The question is, when is it unsupervised?
Right.
Where that's where we
Right,
want
where
to.
you're sitting in the back, so to speak.
Yes, where you're like asleep, and the car, you wake up at your destination.
Yeah.
In order for that to be the case, we want the autonomous car to be much safer than a car driven by a person.
Right. Are we? But again, I'll come to Waymo, because even though they only have about 700 cars, they obviously are on the market. They're in Beverly Hills, all
Sure.
over the place. They're in
It's a
San
proof of
Francisco.
concept.
They've got 28 cameras. They've got LiDAR and radar. You've had a different approach. I think 8 to 9 cameras and the neural network. Why do you feel that is going to be the equivalent in terms of safety profile?
Oh, I think it'll be better.
Why?
Because the way that the road system is designed is for AI. It's for intelligence, biological neural net, and eyes. That's how the whole road system is designed. So what will actually work best for the road system is artificial intelligence, digital neural nets, and cameras. And we also have the microphones so the car can hear emergency vehicles and that kind of thing.
Right. You are going to have the microphones to hear the
Yeah, you need to
'cause
hear.
that was a question. Right. You need to hear a fire engine or a police car.
Yes, exactly.
Right.
But that's how the whole road system is designed. It's not designed for shooting lasers out of your eyes. And what we found is that when you have multiple sensors, and they tend to get confused. So do you believe the camera or do you believe the LiDAR? And if you get confused, that's where that's what can lead to accidents. So we used to have, for example, radar in the car, but we found that the radar and the camera would sometimes disagree, and then you don't know which one to believe.
So it wasn't about expense. It was just about.
No.
Yeah. Are you seeing the data right?
In fact, we turned off the radars in the cars.
You turned off the radar. Yeah.
Yeah.
So I mean, are you comfortable right now? If I were to say to you, all right, let's go, you think that you're there in terms of the safety profile you're seeing right now?
Yeah, we could take a ride today if you want. Sure.
Yeah. Well, I'm happy to take a ride with you anytime you want, wherever you want. Logistics capability to operate sort of a ride-hailing fleet at scale, because you mentioned, obviously, let's call it the end of 26. Are you going to have an app? Are you there? Do you have that ability?
I think we can figure out an app. Somebody
do?
tells me.
You're not worried about it?
Which Tesla already has an app.
Yeah, I know. But so is there going to be a ride-hailing app you'll introduce?
How to ride an app? That's really not the.
It's not too hard.
No.
XAI can probably do it for you in like an hour.
Tesla can ride apps just fine.
Do you ever consider licensing the technology?
Yes.
At some point.
Yes, there are a number of major automakers that have talked to us about licensing self-driving, and we're very much open to that. I think the more we demonstrate the capability of self-driving, the more that they will want to license it, and we're happy to help.
Musk also adding he thinks Tesla's autonomous driving technology will be safer than that of Alphabet-owned Waymo. Good day yesterday here on CNBC, because Deirdre Bosa was able to catch up with Waymo's co-CEO and get her reaction to the interview, and here's Deirdre now as well. So they're going back and forth. Of course, right now Waymo is the only one on the actual road doing rides every day, Deirdre.
Right, with a fleet of about 1,500 cars. And really, these are two very, very different visions for the future of autonomy. You heard Musk lay out his vision. He's arguing that driverless cars should mimic humans. And like he said, the road was made for eyes and brains. He says not lasers. But Waymo's co-CEO, Takidra Mokawan, she tells me that the vehicle needs to be better than humans. And that means sensors plus AI. Have a listen.
You have to be able to see at night. You have to be able to have this vision that's better than humans, right? Like what we're doing is we're replacing humans. We're not asking you to sit behind the wheel and take over the vehicle at a really vulnerable moment.
Right.
Instead, we're inviting you to sit in the back seat, relax and unwind, and get safely to your destination. That's a very different value proposition, but it's one that requires belts and suspenders, and that's the approach that we've taken.
Yeah, so that value proposition, it centers firmly around safety. They have a safety hub, they have a track record, and reaching 10 million autonomous trips, that is a milestone that reinforces their approach and goes beyond proof of concept. Remember, this is a business, 1,500 cars in the fleet, 250,000 paid rides per week. Mabukama says that every additional trip at this scale, at this point, it is accelerating the rate at which the Waymo driver is learning. While Musk and Mawakana disagree on how to build and deploy driverless tech, though, they do align on national regulation, guys. She said that essentially, they're also hoping for it. And she's actually optimistic that it can be done in this term.
When you're focused on safety, we think that should be at the federal level. And President Trump and Secretary Duffy have both been very supportive of that. I think there's a recognition right now, given how dynamic this space is, that now's the time to sort of make U.S. innovation a global leader in the autonomous vehicle space.
Like I said, she's optimistic that could be done in the next 3-4 years. And finally, guys, in terms of scaling a fleet in the years ahead, there's another big tension point between the two strategies. Yes, Tesla's vertically integrated. It owns the tech, the hardware, eventually the rideshare network. But Waymo is going to be rolling out lower cost fleets, and it is working with Toyota on personal ownership of the Waymo driver. So the next year or so in the robotaxi space is going to be very, very interesting to see how these strategies converge and diverge.
Yeah, and interesting on the price point, of course. I mean, a Waymo does cost a lot more, I believe, Deirdre, than does the Tesla with FSD right now, correct?
Well, it's commercial, right? So it depends on what you're looking at, right? If you're looking at Tesla FSD, it's a monthly subscription fee, which you could argue is more expensive if you're using it less than you are taking a Waymo rideshare. The question, I think, at this point is Waymo more expensive than Uber? And yes, but that cost, Mawakana tells me, is going to come down. And, the cost of lidars are coming down. The cost of their vehicles are going to come down as well. So it's sort of more, where will we be a year from now?
Guys, this is super fascinating. And Deirdre, I just want to go back to Waymo specifically, because obviously Alphabet is such a big tech conglomerate. As Waymo starts to get more traction here and build out, and we enter this era we've been talking about for so many years of robotaxis becoming reality in a mainstream way, is there ever a possibility that we see it spun out of Alphabet?
I asked her that exactly. I said, could you operate, because it does feel like Waymo is underappreciated in this whole Alphabet conglomeration. Its last valuation was, I believe, around $45 billion, right? And that is a huge sort of different from what you see Tesla valued as a robotaxi company. She said that right now, they love being under the Alphabet umbrella. It gives them capital, it gives them access, it gives them technology. Who knows in the future? I think that there's analysts on Wall Street and investors who would like to see it spun off, but she didn't allude to any plans for that in any near future.
David, on the flip side, I mean, we see so many synergies between all of Elon Musk's companies, and I thought it was really fascinating. And I realized he maybe demurred in terms of the answer, but when you asked him about the possibility of XAI being absorbed into Tesla too.
Yeah, I asked that in part because, as you know, Morgan, he's been talking about wanting to have a higher level of control at Tesla. That goes back to the dispute around his compensation to a certain extent, which, of course, he hasn't received since 2018 because he hasn't gotten all of those shares. And one way you could imagine, of course, is if they were to actually buy XAI, which he owns the bulk of, then he would get Tesla shares for that ownership, which would take him up. To your point, I don't think that is something that is currently on the table or being considered. And given the losses at XAI right now, how much they're spending, it wouldn't necessarily be something Tesla shareholders might be excited about. But we will be focused on that comp again for Mr. Musk as well. The Delaware Supreme Court is going to be ruling on the denial yet again by Chancellor McCormick. And so we'll see where that all ends up because he obviously wants to stay as CEO, but he also does want to conceivably get some sort of level of control that's above where he is right now. Carl?
It does sound, though, like control is more important to him over the long term than the money.
Than economics, yeah. It does, yes, that's right.
Guys, let's get a look at the roadmap for the rest of the hour. Alphabet's on the move following those AI announcements. We'll talk to an analyst who says there's one major step the company could take to double the value for shareholders.
Plus, we will have more from that interview with Elon Musk, including his respect for China and competing as well with that country's EV makers.
And Speaker Johnson says a deal has been reached with a key faction of Republican holdouts on the tax bill. We'll get some new details as Squawk on the Street continues after this.
AI meeting agent.
Welcome back. Well, Alphabet leading the NASDAQ 100 this morning. It's up 3% following news out of its developer conference. Google beefing up its AI offerings. It's announcing updates to its search engine called AI Mode, a new VIP AI subscription service, and new smart glasses in a partnership with Warby Parker. Our next guest says there's one thing the company can do to unlock value in a major way. So let's bring in D.A. Davidson analyst Gil Luria. He has a hold rating on the stock, $160 price target. Gil, it's great to speak with you this morning. Let's start right there. How do you unlock more value at Alphabet?
The only way forward for Google is to do a big bang breakup. So spin off the ad network, spin off the cloud, the AI business, with or without the TPU business, spin off the TPU business, spin off YouTube. That's the only way shareholders will get the full value of these businesses. Yesterday was a great Google in a nutshell moment. They introduced all this technology that puts them in the lead in all these AI categories, the glasses, the translation, the strong models, the image generation, and the stock was down. It's been down for the year. It's bouncing back a little bit today, but it's been down. What that tells you is right now, because search is so overwhelming, the stock is just trading at 16 times earnings. So you talked in the previous segment about how valuable Tesla is based on a hypothetical robo-taxi. Alphabet has Waymo. Every time you take a Waymo ride, they lose money. 16 times that, the stock goes down. OpenAI is worth $300 billion. Every time you use ChatGPT, that value goes up. Every time you use Google AI, they lose money on that. 16 times that, the stock goes down. It's an untenable situation. They need to isolate the search business. It's controversial. It will continue to trade at 16 times. The other businesses are going to trade at 50 times. They'll trade at 10 times revenue, and that's how the stock can double. All the management team has to do is move forward on that kind of plan.
But we know Google, Alphabet, like others and other hyperscalers and others that are spending all of this money on AI are throwing tens of billions of dollars at that. So if they were to break this up, do they lose the ability to make those kinds of hefty investments that can be seen and realized across all these different parts of their company?
Not necessarily, because they can put the cash in the money-losing business. They could lever up Google Search, which is a cash flow machine, and they could raise tremendous amount of capital. Think about all the capital OpenAI is raising. Google has a better model. Our expert on the topic, Alex Platt, has told me that the Google 2.5, the Gemini 2.5 is better than any model OpenAI has. So if OpenAI can raise at this valuation tens of billions of dollars, then if you spun off the AI business from Google, it could raise capital as well. So there wouldn't need to be, you don't have to keep these businesses together. You could put the capital where the high growth business is and lever up the search business. Shareholders would get a much better outcome.
Yeah. All right. So that seems to be saying that you're not a believer ultimately that they can prevail in keeping their current market share in search, and that the newer entrants in terms of AI are going to start to really take market share?
We're not a believer that Google search can keep its monopoly, and we could get into that a little bit, but it's beside the topic, because this is going to take years to realize. This is going to take years to play out for us to find out what the answer to that. Until then, Google's trading at 16 times earnings, which is far below a market multiple, far below any other company at this size that's growing at these rates. So the best thing for them to do is isolate it. But on the first part, no, we don't think they can keep a monopoly. We're already hearing people ChatGPTing things instead of Googling things. And increasingly, these are commercial searches. What's the best insurance for me given these indications? What's the best toothpaste for me if this is my habits and this is my budget? People are asking ChatGPT those kinds of questions now. Those are the questions Google monetizes. The more those questions go to ChatGPT, the more likely it is ChatGPT is going to start selling ads. They just hired a CEO whose job it is to sell ads. Google's monopoly in selling search ads has to end. Even if they keep a big share, they're not going to keep a monopoly.
Right. That is the knock that very few people say. I'm going to Gemini or go Gemini it. Gil, appreciate it. Good to see you, Gil Loria. Coming up after the break, shaking out some details on SALT. The speaker says progress has been made on the tax bill with a key group of holdouts. We'll get the latest from Washington next. Plus, high rates and consumer concerns hitting some of the home builders. But Toll says they can navigate this volatility. What investors need to know later this hour.
driving in the U.S.
Welcome back to Squawk on the Street. Some potential progress in Washington on the tax bill, specifically around the SALT cap. Emily Wilkins joins us now with the developing story from Washington. With Emily, of course, the clock ticking.
Morgan, the clock is ticking, and Republicans leaders on the Hill know it. They are really rushing right now to finalize changes to the Trump mega bill in order to satisfy their holdouts and get folks on board. Now, the House Rules Committee, they have been meeting since 1 a.m., and this could go very late into the evening with this entire process, but we still do not have a copy of the changes to the bill that this committee is meant to negotiate and look through and approve. And this comes after days of negotiation. You know, we've heard about Republican leaders meeting with holdouts, but this is the part where they really have to put pen to paper, show their work, and show what changes they're going to make. But we are getting some details on one of those changes, and that is a new cap for those state and local tax deductions. Now, this agreement is tentative at this point, but it would raise the SALT cap to $40,000 for those making $500,000 or less. And then both the cap and the income level would increase annually by 1%. That would happen for 10 years, the span of the bill, and then it would lock in and become the new baseline from there. And at this point, that is the proposal. That's what we've heard from SALT Republicans. But at this point, we have yet to see, again, a final package. Things could change. Another thing to keep an eye out for, of course, is the analysis that's being done on this bill and the cost. We got some brand new data last night from the nonpartisan Congressional Budget Office that says that the average American household would actually see an increase in the resources provided to them by the government. However, the report also finds that resources would decrease for households in the lowest decile or the 10th of the income distribution, whereas resources would increase for households in the, of course, top 10. Speaker Mike Johnson said that he wants to get a vote on this bill tonight. Obviously, a number of steps that he will have to go through to do that. You wonder, guys, if you're going to wind up seeing a vote late tonight after what was an incredibly early morning. David?
Okay, Emily, we'll be watching and listening to your reports. Emily Wilkins in D.C. Time now for a CNBC News update. Silvana now has that for us. Silvana.
Hey, David. Good morning. President Trump is hosting South Africa's president today in an effort to improve relations after months of tensions. The president has previously accused South Africa's government of allowing a genocide to take place there against minority white farmers. President Cyril Ramaphosa strongly rejected the claim and said he hopes to correct dangerous mischaracterizations in the meeting. The CEOs of a number of major airlines called on Congress today to approve billions of dollars to modernize the air traffic control system. Chief executives from American, United, Delta, Southwest, JetBlue, Alaska, and Atlas Air, along with executives from FedEx and UPS, called current technology wildly out of date and said it is failing Americans. And Virginia Representative Jerry Connolly has died. His family announced his passing just months after he shared he was diagnosed with esophageal cancer. It also comes weeks after Connolly announced he would not seek re-election in 2026 and would step back as the top Democrat on the House Oversight Committee. He was 75 years old, Carl.
Silvana, thanks. Still to come this morning, stocks under some pressure in early trading, but the S&P is only a few percentage points away from all-time highs. Is a push to new records in the cards? We're going to discuss that. A lot more from David's blockbuster interview with Elon Musk, including his take on competing with Chinese EV makers, as we did get some news today from BYD. Stay with us.
certain.
Welcome back to Squawk on the Street. S&P snapping a 6-day win streak as the market rally loses some steam and yields definitely march a bit higher. Joining us here this morning at Post 9 is Venu Krishna, Barclays head of U.S. equity linked strategies. We've been checking in with him pretty regularly. Thanks for coming back in, Venu.
Thank you.
Are bonds going to continue to keep us in check? Equities, that is?
Yeah, we certainly are in territory where you have to keep an eye. Historically, if you look at the levels of rates do matter a lot. So once we come closer to the 5% level, there's a perceptible pickup in negative correlation between the move in yields and equities. And that's because at that level, typically the market starts getting more concerned about inflation and currently, the impact of deficits and things like that. So I think given that, in the last few weeks we saw dramatic, derating and then a re-rating, it certainly matters because they've recovered a lot in terms of valuation.
One thing you've been looking at is the performance of companies that report earnings. Beating hasn't really gotten you much mileage, although missing has hurt, right?
Exactly.
And that tells you something about the market.
Yeah, it tells you a lot about the market is not very comfortable with the fact that companies are dealing with their guidance in many different ways with regard to tariffs. A bunch of them are taking a hit on margins, like in industrials, parts of pharmaceuticals, med tech, some part of tech hardware also. Some of them are increasing prices, again, part of industrials, for example. In terms of margin, it is more retail, which takes a hit. So companies are still grappling with all those issues, and given all the front-end loading you saw in recent weeks, I think the coming quarters are likely to be a little weaker compared to the strength we have seen the recent quarter.
Venu, it's Morgan. We have a dollar index that's back at lows of a month ago. We know that the dollar has weakened against major currencies in general in recent weeks. A lot of focus on the trade talks. You've got Group of 7 meeting in Banff. Focus there, too, and what that means for the trajectory of the dollar. We know that a stronger dollar has been a headwind to major companies' earnings. So is the flip side here that could actually be an unexpected or underappreciated tailwind?
Well, it can be a tailwind if you're more export-oriented, but remember, in the big scheme of things, the U.S. is a net importer rather than exporter. But the key question on, people talk a lot about the dollar, but the work we have done suggests that equity markets generally ignore dollar-related changes on earnings, assuming it to be more or less a one-time hit. Should that change, then it's a different paradigm altogether. But what typically happens is if the dollar is strengthening and earnings are weakening, then the multiples change to offset that, right? So you would expect the reverse to happen if things are weakening. So in the big scheme of things, dollar directly on equity returns is not as impactful till we break critical thresholds, and I don't think we are there yet.
We've been hearing more takes that are pretty constructive on a lot of U.S. assets except for the dollar. Does that make sense?
Yeah, for example, when you think about U.S. equities, right? Let's talk about that. So the relative trade between Europe and U.S. probably has played out, right? And as the new administration is moving more towards growth-oriented policies away from the focus on immigration and tariffs, for example. So and if you look at just earnings, right? The magnitude of earnings strength you saw in Q1 has made everybody wake up and realize that at the core, the hard data is strong. I think the dilemma we face is that the soft data and the hard data have been diverging for quite some time. And this is a post-COVID phenomenon. And I would argue, generally, if you bet against the soft data, you were more right than wrong.
You were more right than wrong.
That's
to
right.
go with the surveys.
No, with the hard data.
To wait for the hard data,
exactly.
Yes.
The surveys have been more pessimistic.
Right.
So, for example, even right now, consumer sentiment is very low.
Yes.
Inflation expectations are very high. But the reality is, if you look at the consumption in general, it's weakened a little bit, but it's still pretty robust. Services is strong, and goods has sort of weakened a little bit. So the point is that post-COVID, one interesting thing is that a weaker survey data has not necessarily translated into weaker hard data.
Yeah, they've been consistent head fakes, some argue, given their strange methodologies. Venu, hurry back. Good to see you. Thanks for coming in. Venu Krishna.
Coming up, we're going to have a bit more from my interview with Tesla CEO Elon Musk yesterday, including his respect for China and what it's like to compete with that country's makers of EVs. And check out shares of CoreWeave as we head to a break. Remember, this company went public at 40 not long ago. It's already above 100. It's up 50%, as you can see, for 1 week. Of course, Musk did say unabated demand for GPUs. Certainly, they're a beneficiary of that as well at CoreWeave. We'll be right back. Welcome back. The topic of competing with China came up a number of times during my interview with Elon Musk. We had a kind of a 2-hour intermission between the two separate sit-downs. He did, of course, voice his respect for the country's workforce. Of course, he also has a very large plant there in Shanghai. Also asked about competition with that country's homegrown EV makers, BYD being perhaps the largest amongst them, as well as regulation around EVs from Beijing.
We have, just get the terminology right.
Understood.
Unsupervised, supervised full self-driving, where there's a person in the car. It has approval in China. But whenever we release a new version, we have to get an incremental approval.
Right.
And at times we do have to battle other car companies in China who are trying to stop us from deploying it.
It's an incredibly competitive market, isn't it?
China is the most competitive market.
Are they ahead of us in certain areas that are important?
The United States still has an advantage in breakthrough innovation, so it's the United States, and I think it's somewhat of a cultural thing. Which is that to have breakthrough innovation, you have to question authority. Fundamentally, you break through, you're questioning the conventional wisdom when you do a breakthrough innovation.
Right.
In China, don't generally like to question the authority, or that's not, it's not as encouraged as it is in the U.S. Questioning authority.
But they do seem to be good at finding something and then making it better.
Yeah, I do want to emphasize that the sheer number of smart, talented people in China who work very hard is amazing. The amount of there's just the sheer quantity of talent. I'm an admirer of China's capabilities. I think most people outside of China do not understand the power of China. It really is something special.
Yeah, whether it's EVs or battery technology, solar, even things such as biotechnology now. Interesting yesterday, that deal that Pfizer announced, for example, to license a cancer drug from a Chinese company. Morgan, I know you also had a lot of talk around China, of course, at the CEO Council Summit as well.
We sure did, David. And here at the CEO Council Summit, I spoke with the president of Arizona State University, Michael Crow, about training a skilled workforce to, in part, compete with China.
If we really want to compete effectively against China and come out as the winners, it's going to be at the end of the day about human capital. It's going to be about who we can produce, how many we can produce, the creativity that we can produce, the learning capacity that we can produce. And so, in fact, we've moved away from the notion that our job is to produce, technicians. Our job is to produce master learners, people capable of learning anything, adjusting to anything, adjusting to AI, adjusting to technological changes, adjusting to COVID, adjusting to this, adjusting to that, capable of learning anything.
And master learners is really what the AI economy is going to require. It's this value that's being placed on higher value that's being placed on soft skills. Here's why Michael Crow is particularly interesting to listen to, because he has basically over the past decade transformed Arizona State University from a sun-kissed party school, if you will, to one of the top tech universities in the country, churning out some of the most sought-after engineers and STEM students in the country. They're working with semiconductor companies, TSMC. They're working with OpenAI. They're working with the Army. And basically, he said just a couple years ago, guys, they graduated 900 engineers a year. This year, graduation, more than 7,000 engineers. And they've done it by, quote unquote, changing everything. I'd also just note the point he made is that now that we've had all this university government back and forth and everybody's attention has been gotten, the focus should now shift to how does everybody come together to make the United States stronger, and perhaps stop thinking about measuring education requirements and thinking about how you strengthen the U.S. economy and how you strengthen the U.S. on the global stage.
Certainly a huge topic that we're not going to settle today, Morgan. Fascinating stuff from both you and David. Still to come this morning, Toll Brothers maintaining its outlook even as mortgage rates climb and housing costs soar. We're going to break that down when we're back in a couple of minutes.
garden centers.
Toll Brothers in the green today after reaffirming its outlook, even as the housing market faces some serious headwinds. Our Diana Olick is here to break it down for us. Morning, Diana.
Good morning, Carl. Yeah, Toll had a strong beat in Q2, but Q3 is in focus now given the new uncertainty over tariffs, stock market volatility, and higher interest rates. So I want to get right to what CEO Doug Yearley said on the call this morning, namely that so far they have seen a tougher spring season.
We experienced softer demand in the second quarter due to a decline in consumer confidence driven by increased economic uncertainty. These conditions have continued into our third quarter. In this environment, we believe prioritizing price and margin over pace makes the most strategic sense.
And Yearley added that they are now reducing spec home starts because, quote, that is the smart way to run this business in the current environment. He noted that they're very pleased with how well they were able to sell specs without larger incentives in the previous quarter. And he said that helped margins. Now, the average sale price of new orders in the quarter was $983,000. That's compared with $1 million in the previous quarter. The closing price was down 7% from the year before. Yearley called the near-term outlook cloudy given affordability challenges, but demand, he said, is positive for the luxury niche, and 70% of business for them is move up and empty nester segment. Also, he said about 24% of Toll buyers were all cash. That's up from their average about 20%. And for those who did use a mortgage, LTVs on those was 70%. So that is big down payments. Toll has seen upticks in move up and first time luxury buyers, but a recent decline in empty nester buyers. Some of that might have to do with those empty nesters not really wanting to sell their current homes into this market. Guys, obviously, they also have very low interest rates they don't want to lose.
Speaking of rates this morning, Diana, what's the latest on the 30-year? 6.9 or so? And we had applications down across the board?
Yeah, 6.99. I mean, it's been right around that 7% range, and we did see a big bump up from last week. So last week, we actually saw a big decline in mortgage purchase applications, down 5%. And that just shows you how sensitive today's buyers are. Maybe not the luxury Toll Brothers buyers, but the average buyer who sees just that small tick up in mortgage interest rates is not going to be able to get back into the market because, you know, they have so many other issues going on with the economy. Morgan?
Okay, Diana Olick, thank you. Well, coming up next hour, the CEO of Medtronic joins us on their latest quarter and new plans to separate the diabetes business into a standalone company. Plus, former Tesla president John McNeil with his take on Elon Musk's comments to David Faber. Don't miss it when Money Movers begins right after this.
Near you.
Do it well. Crypto.com is America's premier crypto platform.